Right, so I just wanted to really quickly share a few examples of a chart setup, an intraday setup that we've been seeing quite a lot lately in low market cap names with catalysts. I'm going to keep it really simple, but we have been seeing this setup quite a bit lately. It's something that might be worth keeping an eye out for if it suits your trading style. First one's WA1. This was the 26th of October. Gapped up early and ran from 24 odd cents up to about 36 in the first half hour or so. Shallow dip, tried to run again on volume, couldn't break through, and then dipped back to the VWAP, which it held for about 30 to 40 minutes after that. But basically a really shallow dip considering this was up substantially at the time. Not much movement, volume had dried up, and then you just see the volume start to kick in as it bounces off VWAP, and then more so as it broke that range. And that's the easy part of that trade, really. You're in on the break of VWAP, really defined exit. If you're wrong, you're out as it fails that previous support. So you've got a really low risk for potentially a decent drive. It drove up to 44 odd cents and then actually drifted up all day, and this got as high as $2.90 over the coming few sessions. So it actually kicked on, but I'm really just looking at this period here, this signal where a chart's had a strong early drive and hasn't given much back on the initial pullback. So it's telling us that there's a fairly strong register there, and that they're not taking those instant profits, and it gives us at least a little bit of hope that we get that next leg up. Next one is WR1, which was only 2 days later. It had already had a couple of days of strength, gapped up. There's that 15-20 minute early drive, and then again a really shallow consolidation, a little longer consolidation this time, but didn't even get near the VWAP, which is an even stronger signal. Volume completely dried up over that period, so we're talking 10:15 till 11 o'clock-ish. Volume's dried up, but no sign of any real selling strength whatsoever. So any selling that there was being absorbed, and the volume kicks back in as it starts to drive out of that really tightening consolidation, drives through highs, and again off you go. So, and that's the easier part of that trade. That yellow line's a 9 EMA, holds that relatively well on the way up, and again that one got as high as $1.22 over the next few sessions. So again, I'm not really looking too much about that hold for the coming days. It's just looking for this initial setup. There was another one today, and then there's been others in the previous few weeks as well, but I just thought I'd pull these up. This one isn't as aggressive, a really strong early drive. I think it closed at 7.5 cents. Day before opened at 8.5 odd, drove really hard to 14 quite early, which is that's so basically two bagger from the day before, dips down to 12 cents or so on reducing volume, drives back to highs after that, but couldn't hold the highs, and then falls into that consolidation period with reducing volume. Touches the VWAP basically perfectly there after 11 or towards 12 o'clock, and again turns out of that tightening range on lower volume with some increased volume kicking in. Not quite as aggressive this one, but still, if you're recognizing this signal in here where the volume's kicking in and you're getting it early, quite a definable exit. You're possibly exiting below that VWAP. So quite a small risk for a potential decent reward. In this case, it respected that 9 EMA up to about 18-19 cents and then fell through that later on in the day. So three really similar setups that highlight a pattern that's been showing its hand quite a bit recently. Doesn't mean it'll continue to do so, doesn't mean they'll all work, but at least it might be something worth looking out for. So just to summarise, ideally we're looking for stocks with a low market cap, relatively low shares on issue or small free float. We're looking for a fresh catalyst, so day one news that gaps up and drives higher on high RVOL. Then we're looking for a shallow dip as the volume dries up for an extended period of time. As we get to the pointy end of that shallow dip and tighter range, we're looking for a price lift on increased volume off key levels, VWAP maybe, or 9 EMA, etc. And then your exit plan may involve breach of some key moving averages on the way up. I'm calling this a high dry setup. Just made that up on the spot, but whatever you might want to call it, it's for now it's in play at least. Cheers.